Ethereum, the world's second largest cryptocurrency, has experienced a significant drop in value recently. After reaching a high of nearly $4,727 in October, ETH has now slipped to around $3,350. This decline isn't unique to Ethereum, it's part of a broader weakness seen across the entire crypto market, with Bitcoin leading the downturn. Such sharp moves often leave investors wondering what's next and whether the market can recover. In this video, we'll break down the key factors behind Ethereum's fall, examine investor behavior, and look at what might come next for ETH. Recent drop in Ethereum's price is closely tied to the overall crypto market's performance. Bitcoin, often seen as the market leader, has also faced significant selling pressure, dragging down other major coins like Ethereum. When Bitcoin stumbles, it tends to create a ripple effect across the market, impacting sentiment and trading activity. This interconnectedness means that Ethereum's fate is often linked to broader trends, making it important to watch both assets closely. As we move forward, let's see how investors are reacting to these price changes. Despite the sharp decline, there's evidence that large investors, often called whales, are taking advantage of lower prices. Recent data reveals that these investors have accumulated nearly 394,682 ETH, worth about $1.37 billion in just 2 days. This kind of buying activity suggests that big players still have confidence in Ethereum's potential for a short-term recovery. When whales buy during a downturn, it can signal a possible bottom and inspire smaller investors to follow suit. Let's explore what this means for the market's outlook. Buying the dip is a common strategy in financial markets, where investors purchase assets after a significant price drop, hoping to profit when prices rebound. In the case of Ethereum, the recent accumulation by large investors shows that they believe the current price level could be a good entry point. This approach is risky, as prices can always fall further, but it often reflects optimism about the asset's long-term prospects. Understanding this behavior helps explain why Ethereum's price might stabilize or even bounce back after a sharp decline. Looking deeper into Ethereum's network, on-chain data provides valuable clues about investor activity. Since mid-August, the number of active addresses on the Ethereum network has dropped by 24%. This decline suggests that fewer people are engaging in transactions or taking risks, which often happens when prices are falling. However, it's important to note that on-chain activity can fluctuate for many reasons, and a drop in active addresses doesn't always mean the network is weakening. Let's see what else the data reveals. Despite the drop in active addresses, Ethereum's network is showing signs of strength. In fact, the network recently hit a new record, processing 24,192 transactions per second. This milestone highlights Ethereum's ongoing progress in scaling and improving its technology. A strong, efficient network can attract more users and developers, which is crucial for long-term growth. Even as prices fluctuate, these technical achievements provide a solid foundation for Ethereum's future. Next, let's look at how traders are feeling about the market. Market sentiment can change quickly, and recent data from Santiment shows that traders have moved from a bearish outlook to a more bullish one. This shift in attitude often happens when prices appear to stabilize, or when investors believe the worst is over. However, sudden optimism can sometimes lead to short-term pullbacks, as some traders may take profits or react to unexpected news. Understanding these mood swings is key to navigating the volatile world of crypto investing. Market sentiment refers to the overall attitude of investors toward a particular asset or market. It can be bullish, meaning investors expect prices to rise, or bearish, meaning they expect prices to fall. Sentiment is influenced by news, price movements, and broader economic factors. In crypto, sentiment can change rapidly, making it important for traders to stay alert and adapt to new information. Let's see how current sentiment could affect Ethereum's price in the near term. One important indicator to watch is the funds rate, which shows the cost of holding long or short positions in the market. A negative funds rate means that sellers are paying buyers, which often happens when there's more bearish sentiment. Interestingly, this can be a sign that the market is bottoming out, as it suggests that selling pressure may be reaching its limit. When the funds rate turns negative, it sometimes signals a potential turning point for prices. Several factors suggest that Ethereum's price could be nearing a bottom. Large investors are buying, the funds rate is negative, and trader sentiment is shifting. These signals often appear when markets are about to turn around. However, it's important to remember that no indicator is perfect and prices can remain volatile for some time. By watching these trends, investors can better prepare for potential changes in the market. With large investors stepping in and technical indicators showing possible support, there's growing hope for a short-term recovery in Ethereum's price. Many traders are watching the $4,000 level as a key milestone. If ETH can reclaim this level, it could signal renewed strength and attract more buyers. However, the path to recovery may not be smooth, as volatility remains high and external factors can quickly change the outlook. While there are positive signs, it's important to recognize the risks that still exist. Crypto markets are known for their unpredictability, and sudden news or regulatory changes can impact prices. Investors should remain cautious and avoid making decisions based solely on short-term trends. Diversifying investments and staying informed are key strategies for managing risk in such a volatile environment. Despite recent turbulence, Ethereum's underlying technology and active development community continue to drive its long-term value. The network's ability to process record transactions per second and ongoing upgrades make it a leading platform for decentralized applications. These strengths provide a strong foundation, even as prices fluctuate in the short term. Let's recap the key takeaways from Ethereum's recent journey. Ethereum's recent price drop reflects broader market weakness, but large investors are showing confidence by buying the dip. On-chain data shows a decline in active addresses, yet the network remains robust with record transaction speeds. Trader sentiment is shifting, and a negative funds rate hints at a possible market bottom. While risks remain, Ethereum's technology and community support its long-term prospects. Staying informed and cautious is essential for navigating these uncertain times. As we look to the future, Ethereum's journey will continue to be shaped by market trends, investor behavior, and technological innovation. Whether the recent dip marks a turning point or just another chapter in crypto's ongoing volatility, one thing is clear: staying informed and adaptable is crucial. By understanding the signals and keeping an eye on both risks and opportunities, investors can better navigate the ever-changing world of Ethereum and the broader crypto market.